So going on to step 4, what is your process from here? Now that you've done your numbers, you've done your analysis, and you see a pretty good deal sitting there, the negotiation and offer process begins.
To me, this is the really exciting bit, because with real estate, you can put anything in your offer that you want. When it comes to just about any other transaction, stocks, bonds, treasury bills, certificates of deposit, you can't structure an offer on your terms. If the CD is selling at, $68,000, that's what you have to pay. Whereas with real estate, you can add other things and just some wacky ideas. There's nothing to stop you putting in your offer document, for instance, the seller will accept as part payment for this acquisition my old BMW that's only firing on 3 cylinders. It may sound odd, but the point is you can put things like that in the deal, and people often do. So this is your chance to be creative. Most people will come up with a pretty standard offer where they're offering a certain price and they might want some carryback finance at a certain interest rate. But you can just about do anything you like in there. One of the examples I think is of most benefit to people is part of the offer could be that you agree that closing will not take place immediately, but may in fact take place 2 or 3 months out. And that furthermore, in your offer contract you put, the buyer will have the right of access in the meantime, prior to closing, to effect improvements. Now, there's no downside for the seller. He's absolutely got a rock-solid contract. You will close within 3 months. You will pay the asking price. And even if you go on to the property in the meantime to effect improvements, if you renege on the deal, he's got the benefit of those improvements. The advantage for you could be, for instance, that you're agreeing to buy this property for $100,000. That's the seller's asking price. But in the meantime, you go in there and put those petunias in and all those other minor improvements so that when you get round to closing, you bring the appraiser in and suddenly it appraises at $120,000. And then when you get an 80% mortgage, you might be able to acquire all of the acquisition price in the form of a mortgage.
So you put nothing down.
Again, there's nothing down with no seller finance required. In the final analysis, what makes it a good deal for you is whether the numbers work. You've got to know whether you've got the cash flow, which covers all your costs and then leaves some at the end, and whether there's good long-term growth in that area that we identified way in the beginning to make an investment worth your while. There are many factors that can make it an extra specially good deal. I always look for a property with a bit of a twist, something that I can effect a change that will dramatically improve the value of that property beyond what it's costing me.
So an example of a twist could be like a garage or a second house on the property.
Right. One of my favorite examples is when there is a house which has no garage or carport. You can very easily, and for around $1,000, build a carport there. The value of the property will go up a lot more than the $1,000 it would cost to build that carport. What's more, you will get easily $80 a month extra in rental income, which over the course of a year is about $1,000. So by spending $1,000 cash, you can get an extra $1,000 a year coming in. That's 100% return on your money, which of itself is pretty good.
In 1 year.
In 1 year, but you get that every year, and it's indexed for inflation.
And if you talk to the banker, you may ask for a higher appraisal.
Right, but it will be easy to get because the appraised value should in fact be higher with the carport there. Or if in fact there is already a carport there, you might even box it in and turn it into a garage. So the ideas are limited only by your imagination, and that's one of the things I love about real estate. When I look at a property, I mentally go through this checklist of all the things I can do to the property to increase its value, and what things can I put in the contract when I'm negotiating to buy it so that I can get the benefit of these improvements.
The other part about an offer I always put in is I always say this is contingent upon my partner or somebody inspecting the property. That contingency is always my escape. So it gives me a chance to find out what the negotiation really is between the seller. So in case they accept it right away, I still have an escape clause in there if I find something I don't want. Sometimes if I find something I don't want in my due diligence or my inspection process, that's another reason to go back to the seller and renegotiate. So as we say on the video, it costs you no money to make an offer. The point here is this: if you've gone through the steps, you've looked at enough properties, you know what the value is, you know what the rental rates are, your nervousness goes down, because this is where most people back out, because it's like the big commitment time, and they have to make an offer time. You still have escape routes if you just put an escape clause in it. But don't do that to escape. Do that to protect yourself more than anything else. But this is where the process gets real, and oftentimes amateur investors back out. Anything you want to say about that, Dolph?
I agree with that. I think if your offer is going to be rejected, it should be rejected by the seller and not by you, the offerer, before you've submitted it, because you've got one of these little voices inside your head saying, well, this won't work, or there's something wrong here.
Or there's too much risk, or what if this goes bad, or something like
Right.
this.
And always remember that no matter how complex the deal is, the more complicated it gets, the tougher it is on your competition too. And all you need is a bit more perseverance than they've got, and you will get more deals than anyone else.
Right. So this is where the knee-knocking factor gets high for most people. But if you've done your numbers, you've done your research, that your confidence should be higher, even though your knees continue to knock. But keep going forward and make as many offers as possible, simply because, as Dolph says, don't reject yourself. Let the seller do that.
Right. And when some of those offers are accepted and you start to get that positive cash flow, and as time goes on, you see that those values have been rising, the only thing you'll say to yourself is not anything like, gee, my knees were knocking a lot, or I shouldn't have done this deal. You'll say, if only I'd bought more.